benefiting the most? What does it mean for clients, a rate cut? What does it actually mean?
Yeah, like rate cut happens, great, yay, but now what? So here is what comes next and what you should be doing. Welcome to the Finance Matters podcast. My name is Rahul. With me I have Adrian Tremoli. We are from the Team Lenders Club, and today we are gonna talk about a very interesting topic.
We do. We have a really good topic to talk about today. After 13 consecutive rate increases, the RBA finally found it in their hearts to give us a rate cut, and they've dropped the cash rate by 0.25 basis points. We're now sitting at 4.1. It's about time, right?
It's about time. It's first time in nearly 5 years that this has happened. So I have been waiting for this date more than my birthdays.
Yeah. I think it's a happier day than your own birthday, right?
Absolutely. Yeah. From here on, 18th of Feb is my new birthday.
Done. I think I might change mine too.
So, it's very convenient that this inflation just started to drop, and rate cuts also happened just a few months before elections. But hey, we are not here to question a good thing.
No, we're going to let it be. We're not going to get into that side of it. But yes, it is pretty coincidental.
We will just take it and we will just tell our audience and our viewers and our clients how they can maximize on this and how they can take the max benefit from this. So we will get into that and dive into this. But before that, I need you to tell me, first of all, some details and some stats about that. When will the banks pass this on to clients, and when will the consumers be able to take benefit of this?
Well, on Tuesday, on the 18th, some banks, generally the first tier lenders, within minutes sent out emails to us letting us know they're passing on the full rate cut. A few other lenders are, like your second tier, your third tier lenders, they are slowly sending their correspondence out to let us know that they are still passing on the full reduction of the 0.25. So most of them will take into effect on the 28th of February. So meaning that any current deals that are in pipelines or deals that are currently being lodged will benefit from this new rate reduction once it settles. But they are passing it on a lot quicker than I thought, to be honest.
I thought it's about time, because the more the delay on this, the bad their reputation gets.
Yeah.
So the ones to pass on the first already have something to salvage in terms of their reputation. So they are the quickest to pass on the rates that, hey, we did that, see, we are with you on this. Some of them are still going to pass on the 4th or 5th of March. And some banks have already implemented that to their existing clients. So clients have already got rate reductions from day one.
Yeah, they'll be getting their letters shortly to outline their new rate and new repayments. But a lot of good is happening right now. A lot of people are going to start saving some money. So just as an example, on like a $500,000 mortgage, clients are going to start to see reductions of about $80 a month. So that does add up.
It does. For a month, for a year, it's about $1,000 already. And there may be some future rate cuts happening. So more in our pockets, and that's a good sign. That's a sign of good things to come.
But ultimately, with a rate cut, who is benefiting the most? What does it mean for clients, a rate cut? What does it actually mean?
Yeah, like rate cuts happens, great, yay, but now what? So here is what comes next and what you should be doing. So first of all, the impact of rate cuts is increased borrowing capacity.
Ooh, everyone's favorite, huh?
I know. And what does it mean, increased borrowing capacity? How much does it really increase when a 0.25 rate cut happens?
So essentially, with a rate reduction, that's going to lower your current monthly liability. Now, if you're spending less on your monthly repayment, that's additional cash that you have, which then can be added to your borrowing capacity. So generally speaking, the 0.25 will add between 2.5% to 3% of borrowing on top, and that may be the difference between a client getting a deal across the line or not.
Exactly, and especially even if you don't have current liability, if you are getting into the market, this one is going to be a first loan, the percentage don't change. It's still going to be 2.5 to 3% increase in your borrowing capacity, but then the bank's living expenses calculator also go up. So that might also come into picture and not affect your borrowing capacity quite as much. So in terms of figures, it's not that big of a difference. But when you think of it psychologically, a lot of people are getting FOMO.
Yeah.
What is fear of missing out?
They want that new rate. They want to see their rates drop.
That's collectively impacting the market. A lot of people are fearing that they will miss out on the property.
We're getting
because-
calls. We're getting calls about clients and their rates, or is it being passed on to me? And clients wanting to go purchase property, knowing that the rate, because of a rate drop, they might be able to just edge over the line and get that property. So you're right. A lot of FOMO is happening, and rightly so.
Especially the people who are waiting to get into the market, they are getting into the market now. I'm selling increased sale of properties from real estate agents. A lot of properties that were for sale are already sold. Whenever you just go across the streets, that's the difference that I'm seeing again. So the market has already started to pick up in property prices. Maybe not as much, but still there is movement already. And it's just been 2 or 3 days since they declared the rate cut.
I know, it's only been a couple of days and we're already seeing a massive change in the market. Now, one of the other things I did mention is the current liability repayments reducing. Now, does that happen automatically?
So no, banks sometimes do not adjust your repayments when the rates go down. Now there are two sides of this. First of all, if you have principal and interest repayments, that's when sometimes they don't do that. So if you want to lower your repayments, you have to call them and tell them adjust your repayments as per the new rates. If you don't do that, you are still paying same repayment as before. You have less cash flow, but you are paying principal more now.
That's going to take time off your loan.
Exactly. What it means is that instead of paying it back in 30 years, you can repay in 28, 25 years because you are repaying the same amount. Interest part has gone down, interest rate cut has happened, so you are paying more principal. Now there's other way to do that as well. Tell me how they can do that by taking benefit of lower repayments and still paying less interest.
Look, another way it can be done is also putting that money in an offset facility. So we'd be offsetting the interest on the current loan, and that is also another way that clients use this facility to pay down their loan sooner. Exact same as sort of a redraw facility, only the offset is its own separate transaction account that's linked to your loan.
So you can lower your repayments, get the call the banks, ask them to adjust to the new interest rate, and then have more cash flow available, still park that money into your offset account and still repay your loan in 25, 28 years.
If you don't have an offset facility, definitely give your broker a call and they might be able to organize and get something all set up for you because they do have their benefits.
Exactly. Now that brings us to the point of exactly restructuring. If you don't have any of these features, one offset account, multiple offset accounts, if you want to restructure from interest only to principal and interest to interest only, get some equity out.
You might have your loan might be split into multiple different accounts, making it a bit confusing. Which one do you have to pay on time? What rate is each loan on? Because they might be different. Now would be the perfect time to give your broker a call and restructure. Just like Rahul said, offset facilities, any other benefit in terms of reverting to interest only to boost cash flow, or you're wanting to just pay off your principal as soon as possible or going back onto P&I, or to increase borrowing capacity, reverting your loan term onto 30 years, which is another rate as well. Now is the perfect time with rates.
Refinancing in itself is a completely different topic we can talk about for that. The benefits of that, when to do that, if you should do this or not, we can take an hour just to discuss that. But basically,
we don't have an hour, Rahul. We don't have an hour,
would
but
love to take some
we
time,
can.
but we will do that sometime in the future.
We can, but now is the time. If you are looking to restructure, if you have one of those issues that we just mentioned, or one of these possible aspects that you want to do, now would be the time. With banks obviously passing on the rate, it's time to do something.
And you may have some personal loans, credit cards on higher limits, higher interest, maybe 7-10% is what you pay on car loans, personal loans. You can consolidate those as well with this. So plenty of things you can do. This would be an opportunity to take advantage of that and get some extra benefits. And other benefits would also include something on the lines of considering maybe fixed rates.
Look, we did start seeing a few months ago banks start advertising that they're dropping their fixed rates. They knew that this would happen, right? So even though we are seeing the variable rate drop, obviously with the 0.25, it might not be the worst idea for specific clients that want to have a guaranteed rate and know what that's going to be. Now, we can't tell what the future holds. We don't know if there's going to be another rate cut, but you might find a 1-year fixed rate beneficial for your home or maybe even your investment property, and you just want to lock in that low rate just for a year. And who knows? That might be of benefit to you. There might be no further rate cuts, or there might be. But it is an option, and that's completely up to you if that's something that you would like to look into further.
Just for an example, current principal interest rates after the rate cut would be 6.09, around that. And there are rates in the market starting from 5.85% for 1 year fixed, 70% LPR with offset.
Yeah.
So that even after one more rate cut, which may happen, may not happen, or that's all you may get in future, you can get that 1 year fixed rate just starting from today itself. So something to consider if it fits in your strategy, if it fits your future requirements. So get in touch with your broker, your banker, or whoever does your analysis, and just maybe get on board with this.
Well, everyone, that's all for today. Thank you for joining us in regards to our topic of the rate cut from the RBA. Hopefully more to come, and we'll see you guys next time.